July 13th, 2017. Good morning. Today's editorial is entitled Market Operations. The Federal Reserve began a sustained and important reversal in policy on December 17, 2015, when the federal funds rate was increased from 25 to 50 basis points. Since they began raising rates, 3 subsequent increases have followed. December 15, 2016, the Fed increased rates from 50 to 75 basis points, and again on March 16, 2017, and June 15, 2017, the FFR was increased 25 basis points at each meetings, from 50 to 75 basis points, and then again from 75 basis points to 1%. The FFR's actual target rate, stated on their website, is 4%. For going on 2 years, we've heard a great many touts predict the Fed will stand pat and that it's all a bluff. Clearly, the Federal Reserve was serious and is growing increasingly so. During the policy normalization process that commenced in December of 2015, the Federal Reserve informed us it will use overnight reverse repurchase agreements as a supplementary policy tool. RRPs would be employed to help control the federal funds rate and keep it in the target range set by the Federal Reserve's Open Market Committee. 2 interesting items of note from their consolidated financials. Gold certificates actually decreased, and repurchases actually declined. In fact, so did U.S. Treasury securities, mortgage-backed securities, enterprise debt securities, albeit these declines were slow. The real eye-opener was this. Year over year, net income after providing for remittances to the United States Treasury, well, those flipped by a rather large amount. In 2015, a loss of $5.8 billion was incurred. And yet, in 2016, net income of $328 million, a near $6 billion nadir. The reduction in gold certificates is interesting, as it seems to correlate to longer-term movements in the price of gold, and not inversely, as many seem to suggest. The Secretary of the Treasury is authorized to issue gold certificates to the reserve banks. Upon authorization, the reserve banks acquire gold certificates by crediting equivalent amounts in dollars to the account established for the Treasury. The gold certificates held by the reserve banks are required to be backed by the gold owned by the Treasury. The Treasury may reacquire the gold certificates at any time, and the reserve banks are required to deliver them to the Treasury. At such time, the Treasury's account is charged. The reserve bank's gold certificate accounts are reduced. The value of gold for purposes of backing gold certificates is set by law at $42.22 per fine troy ounce. Gold certificates are recorded by the reserve banks at original cost. The Board of Governors allocates the gold certificates among the reserve banks once a year based on each reserve bank's average Federal Reserve notes outstanding during the preceding 12 months. This may appear insignificant. It is not. The gold held by the United States Treasury at $42.22 is valued at just over $11 billion. Whether or not these official reserves actually exist is irrelevant. They do exist. It is real ownership, which is of concern. Given the Federal Reserve reports approximately $3.6 billion in gold certificates held by the Federal Reserve, backed by the United States Treasury gold. Gold remains a Tier 1 asset on the Federal Reserve's balance sheet. The Federal Reserve holds close to 30% of the Treasury's gold reserves and certificate claim. It is important to note all of the Department of the Treasury certificates issued are payable to the Federal Reserve banks. Being gold certificates issued by the Treasury, the word payable means payable in gold. If the Federal Reserve had ever redeemed the gold certificates issued and took possession of the gold, the Treasury would not have the ability to profit off the gold certificate swaps. The U.S. Treasury would no longer have the gold in their possession to do so, leaving the U.S. Treasury without a Tier 1 asset. As Eastern nations have been adding to their treasuries over the past decade at a precipitous pace, the dollar's demise will be closely linked to these certificates held by the Federal Reserve. Thank you, and have a great day.